If you look at our inflation, it's moving up since the start of the year. If you look at inflation in our trading partners, it's relatively low. For example, take the case of China. China's inflation has been below their 3% target. In fact, I think latest figure was at 1.8%. So that means that the inflation differential is widening between Philippines and China, which means that the goods of Philippines becoming less competitive compared to China, or it's more expensive. Although there is a peso weakness because of this widening trade deficit, that's of course a reaction to the trade deficit. You have this peso depreciation, but recently we saw emerging market currencies also depreciating. Indonesia, Malaysia. So, I mean, it seems that, but in their case, their inflation remains manageable, more manageable than ours. So that indicates that there could be some negative impact on this widening differential on our exports. Year to date, exports has been sluggish. But I can also hypothesize that this may have been due to strong domestic demand for manufactured goods, because manufactured goods comprise a large chunk of our exportable items. So if you have, at the same time, you also have domestic production not being strong enough to keep up with this strong demand. So if you have strong domestic demand compared to local production, then the surplus that you ought to be export will diminish.